Hello friends, welcome back to Wealth Growth Club. Today, we are taking a closer look at a giant in India's logistics world, Adani Ports. If you follow Indian business, you have definitely heard the name. But what's really going on behind those numbers? Let's break it all down so anyone can understand how this port powerhouse is making moves. Let's start with the big picture. Adani Ports isn't just any company. It's India's largest private port operator, running 15 ports across the country. Right now, the market values this business at nearly 3 lakh crore, and each share trades around 1,371 rupees. Over the past year, the price has jumped between 994 rupees and a high of 1,517 rupees. Let's dive right into sales. The money coming in from all those port operations. Back in 2014, Adani Ports got 4,830 crores in sales. But fast forward to today, and sales have skyrocketed to 32,645 crores. That's almost a seven-fold jump in just over a decade. Recent sales growth was 14.09% for the latest 12 months and shot up by more than 28% in 2024. So the business keeps getting bigger. More cargo, more ships, more money. Of course, big business means big spending. Adani's expenses also climbed up to 13,107 crore recently. A lot goes into keeping ports running. Employee costs are steady, around 6 to 7% of expenses. Manufacturing cost, the cost to operate their facilities, is about 27%. What's important here is Adani's ability to keep expenses well below their booming sales. Now, let's get to the good part. What's left after paying the bills? Their operating profit is now a stunning 19,539 crores. And here is an incredible fact. Their operating profit margin is at 60%. That means for every 100 rupees in sales, 60 rupees is left after cost. That's a high profit margin in almost any business and shows why Adani Ports have heavyweight status in India's infrastructure story. Adani Ports also makes good money from other income, like investments or special deals, 1,379 crores recently. It pays interest about 3,011 crores and locks regular depreciation on big port equipment, 4,622 crores. Moving past interest and taxes, what do we actually have left? Net profit is up to 11,265 crores. That's more than 6 times higher than a decade ago. Earnings per share, which matters to investors, sits at 52.28 rupees, a big leap from just 8.40 back in 2014. So for shareholders, it's been quite a journey. Adani Ports pays a small but steady dividend, currently a 0.51% yield. Debt is a little high, with a debt to equity ratio of 0.83. Not dangerous, but worth watching as the company grows larger. So overall, Adani Ports is on a massive expansion drive, growing sales and profits nearly every year. They manage their expenses tightly, have sky-high profit margins, and keep delivering results that make investors smile. In short term, the business keeps steaming ahead with double-digit sales growth and rising profits. But in long term, as India's trade and shipping needs keep rising, Adani Ports could stay at the center of the action. Watch for new port projects, exports, and how well they handle that growing debt. So that is the story on Adani Ports. Big numbers, steady growth, and a company right at the heart of India's supply chain. If you enjoy simple explanations for complex numbers, subscribe to Wealth Growth Club, where finance is for everyone. Drop your questions or the next company you want featured in the comments below.